So, my name is Diane Mahoney, and I have the privilege to work at the Bay Area Community Foundation with a wonderful team that includes Sue Jensen, our Director of Finance, Maggie Juan, our Donor Relations and Community Services Officer, Erin Feist, who handles all things scholarship, youth related, and education. We just said goodbye to our student intern on Friday, Camden Williams, who's graduate of SBSU. We also have Rachel Rosas, who keeps us all in line. And then the person you're gonna hear from today is Maddie Searing, and she handles our competitive grant applications. So I would bet everyone in this room knows her, and if you don't, you will end up knowing her before too much longer. So without further ado, we want to welcome you. Nonprofits are businesses, right? I mean, all of us that are in this room that are staffing for nonprofits know that we are running businesses. These aren't just feel-good organizations. And it is critically apparent. There's a lot of stuff going on in our world right now. Bay City is just a microcosm of the world. But it is so important for nonprofits that we be rooted in trust, integrity, and credibility with our communities. So a lot of that will come from board, staff, governance, and relationships. And so we are incredibly fortunate. I'm going to leave the introduction to Maddie, but we are incredibly fortunate that Plante Moran has offered to provide this training to us free of charge. And our business sponsors, who are all noted on the banner back there, are those who provided the funding to provide your lunch and your treats and all that. So I want to thank all of them. And without further ado, I'm going to invite Maddie Searing up. 2 years, and with Joni's retirement, she got promoted to the competitive grants officer, and she took to it like a duck to water. She does not slow down. So Maddie.
Hi everyone, it's Maddie Searing. Like Diane said, I'm the grants officer here at the Bay Area Community Foundation. I want to thank you for spending part of your Monday with us to learn a little bit more about board governance and what it entails. Like Diane said, we're very thankful to Plante Moran for offering, this training free of charge for us. And I have the honor of introducing our presenter today, Amanda Coon. She is their senior tax manager at Plante Moran. She has over 8 years of experience with nonprofits in healthcare, higher education, all of that. Without further ado, we'll bring her up.
This is amazing. It's nice to be in a full room again, especially after the last couple of years. And honestly, I came in thinking we're going to have about 30 people, and this was absolutely fantastic because I love 990s. Lots. And you guys are going on the 990 journey with me today. You're a captive audience. And away. So one of the things I want to talk about today is the assets, the resources, all the things that are important to an organization and why we need to protect them. So the first question I was going to ask everyone is, when it comes to nonprofits, what's the number one thing that needs to be protected? Anyone? The public perception, right?
Reputation.
Yep, reputation. Anything else? Cash. The balance sheet, right? Anything that's sitting there, right? The people, yeah. Our resources, our staff, our administrative efforts, all the things that go into that. The number one thing, and the thing that most people don't realize that they need to protect, is the exemption. Without the exemption, we're not exempt organizations. We're just C Corps getting taxed at 21%. So without your exemption, you put that at risk. That's when you put your entire organization at risk. And if you can put your exemption as the most important thing to you and your organization, then you protect those other things too, right? Because the staff, you're protecting them if you're protecting the exemption. The cash, you're protecting the cash if you're protecting the exemption. So from what I understand, in mid-Michigan, we've had at least 3 occurrences of fraud recently. And it's becoming prevalent because that's where we are as a society. It's become easy. Part of it is because we as nonprofits tend to have our resources constrained, right? So the normal checks and balances are more difficult on charitable organizations. And so it's harder. And then you've got the added issues of having people that tend to work for organizations not always be the most educated in the compliance requirements, right? I will tell you, the IRS does not make it easy. The state of Michigan doesn't make it easy. The Michigan Attorney General's office actually makes it really easy. They're one of the best to work with. But unless you've actually worked in it and you've done what I do for a living, it's complicated and it's confusing and it's frustrating. So one of the things I'm going to try to teach you today is some of that. How to protect your exemption through not only maintaining your compliance, but also overseeing the independence of your board and your governing body, and through all of the controls that you should have in place at your organizations. And then what happens when all of those things fall apart and you have to terminate. So just really quick, if you are on a board of directors and you are either a secretary or a treasurer, could you stand up really quick? We're going to talk to you guys later. There's some responsibilities that some of you have that you may not be aware of. And it comes from a compliance perspective. You know, if I were to ask everyone in this room, how many of you have actually read your bylaws of your organization? That's good. That's over half. Those bylaws are what you need to do your job correctly. And if your bylaws aren't strengthened and they aren't a solid base, we're also going to talk about what you can do to fix that, the policies you can put in place and all of that kind of stuff. So, and this is a lot of technology for me. So if I don't always click at the right time, feel free to yell at me. And also, there won't be a 990 pop quiz at the end. Maybe not. Thank you.
Me see. All right.
Well, while they're doing that, a little bit of background on me. I am a tax senior manager at Plante Moran. I spent the first 4 years of my career working on audits and tax returns. So I've seen things from both sides. And that was one of the reasons they picked me to do this today, is that not only have I done the 990 to report everything on that, I've also participated in the single audits that y'all hate so much. So today we're going to talk a little bit about independent governance and their oversight. We're going to define independence. We're going to talk through some of the proper policies you should have in place, and if you don't, how to get those in place. And then we're going to talk about your controls and what you do as far as a lack of funding and support goes. And then what happens when you do end up having to terminate and what that looks like. So in order to prepare for today, I pulled a copy of every one of your 990s. I told you I like them, right? So I went through and looked. For the most part, a lot of you come from government or government supported organizations. And unfortunately, today might not be as exciting to you guys because most of you have those single audits in place, the things that make you have to, you know, hit those checkpoints and do the things to keep your assets a little bit more supported. The community-based foundations, there's a lot of you here today. I found 4 organizations that have recently obtained their exemption. So they probably got their IRS determinations within the last 6 to 9 months. I found one that got their exemption last month, and they may not have even received it in the mail yet. And then I saw there were a lot of organizations that are currently out of compliance with the Michigan Attorney General's office. And remember, I did say that they are the easiest to work with. So getting you back into compliance isn't hard. But when you're a Michigan 501c3, there are two real requirements that you need to hit, right? The 990 has to be filed, and you should be filing with the Michigan Attorney General's office. You should either file an annual return with your registration or your Michigan license to solicit. And if you're not doing one of those, you may be some kind of an organization that has an exemption, but in general, you're probably out of compliance. And we will talk a little bit more about that later today. One of the things that everyone got was a handout on the overlap between governance and executive management, right? And these fiduciary duties are pretty much handled within there, right? The duty of care, the duty of loyalty, the duty of obedience. I think that there's a lot of people that join boards of organizations and don't realize that these are requirements for your role and your responsibility, right? And there are a couple of things on here that I think people kind of overlook. The first one being, make sufficient inquiries to obtain information necessary to make an informed decision. I feel like everyone in this room could probably say that they were in a position where either time or some other resource constraint made it impossible for them to make sufficient inquiries to obtain information necessary to make informed decisions. Does that seem accurate? Yeah. Duty of care is hard because sometimes it means that we have to slow down and actually ask questions that we don't necessarily want the answer to, right? I don't want to have to go fix the Michigan Attorney General stuff, so just don't ask about it. I don't want to know why this compensation thing looks funny, so I just don't ask about it. And it gets easier and easier after that, right? And coming back to that ability to make sufficient, and honestly, how many times do you feel like you don't have the time to make these decisions? And it's really because in your brain, you're feeling like you don't have time. But if you say, I need extra time to look at this, to make sure that it's right. I don't know that we're always asking for that because it feels like we live in a society right now where everything has to be turned around really fast. And we're all operating under administrative burdens of the accounting world, right? Everything's got to be fast. And then when it comes to the duty of obedience, act with the fidelity to the mission, purpose, and goals of the corporation. This is really difficult when you don't know what your mission statement is. I can't tell you how many organizations I've talked to that when I ask them specifically, what's your mission statement? Who is your charitable class? And they look at me, if you don't know. Knowing who your charitable class is extremely important, right? Who is it that you're serving and how are you earning your exemption? And if you can keep those two things a little bit more front and center, you'll do a much better job of protecting that exemption. So let's talk about independence. According to the 990, and that's what all of this is the actual instructions. So I went to the 990 and I got into what the definition actually says. And independence can be really confusing for people because obviously there's independence in fact and independence in perception, right? So there are obviously some rules that the IRS has put up there, but compensation thresholds of 10,000. So basically you can compensate your board of directors up to $10,000 for their participation as a roll member, and it's not considered a check mark against their independence because that's reasonable compensation as far as the IRS is concerned. However, when there's family involved transactions, that eliminates independence. So I have two members of the same family on a board. automatically their independence is a little bit altered there, right? Now, especially if you've got another family member that's working within the organization and they're making compensation, there's more lack of independence there. Conflict of interest negates independence. We're gonna get into the policies later, but conflict of interest is the #1 policy that you should have as an organization. And as I was reading through the 990s, the majority had that check. Yes, we have a conflict of interest, but I saw at least 12 organizations without a conflict of interest policy. That's a problem. You have to have a conflict of interest policy. And the reason it has to be written is because it has to be written. It can't just be, well, we tell each other if we have a conflict of interest. It doesn't work that way. It has to be in writing. So conflict of interest negates. But one of the other things that I don't think we always realize is those interpersonal relationships within board members. That when you've got, and I see a lot of this on my smaller community foundations, you've got 2 or 3 members of the same family that are sitting on a board. Or you've got some really close friends that are running a board of organization, a board together. And it ends up being one person making all the decisions. That right there, you can't see that in black and white, but it's still a lack of independence. And it unfortunately impacts more of our smaller community foundations than it does anyone else. So, and I don't know that I can tell you the perfect answer for fixing that. So when I looked at all of the 990s, I pulled this one because it actually has some check marks that were really important to me. And one of the things is that their president, who is down here, is not marked as having a voting right. So their president gets compensation. They don't have a vote, but they are an officer of the organization. This is predominantly the way that most organizations look. The presidents don't have a voting right. And the reason I bring this up is that this is an organization from mid-Michigan that had significant theft and fraud over the last 2 years, and their president has a voting right. I'm not saying that that voting right is why the fraud occurred, but I looked at 3 organizations that I know had fraud this year within the last 9 months. All 3 of them had a president that voted. You can tell me all the reasons in the world that a president needs a vote, and I'm sure that maybe they do. But I can tell you that they don't. They just don't. It doesn't add anything, it doesn't take anything away. What it does do is make it so that your board, if they've got a president on it that is overseeing operations, they are the main person running the organization. Now that person has a vote on the board. It makes it so that the board cannot segregate itself. And it's hard. So you have to make the decision. Do we allow our president to vote or not? And I'm not saying that this is right or wrong, but it's one of those things that makes you want to have more conversations about how we do governance, right? And now we're going to get into the policies. So the majority of these policies, and this is one of the organizations that's here today, you got all the boxes checked right. I'm really proud of you. And like I said, over probably 50, 60, 70% of the room had the right policies in place. They have the written conflict of interest, the written, sorry, whistleblower. Whistleblower is extremely important, especially for the organizations that are small. Think about it. They're the ones that need to have access to talk to someone on the board or someone in a position of leadership, because there's only 5 or 6 employees and they know that something's going wrong, but they have no way of knowing there's not going to be retaliation. So, and it's really the smaller organizations that are always missing it. So having that whistleblower is really important. The other policies that are important are going to be your governance, your employee compensation. So executive comp is supposed to be reviewed by the board of directors. A board that doesn't review comp is technically out of compliance. You can review it once a year, you can review it every 3 years, it doesn't matter, but executive comp should be reviewed and it should be something that is voted on by the board. So if your president is sitting on your board, obviously, if you have a conflict of interest policy, they won't be voting on their own compensation, right? But you see where we start to slide into those shades of gray. The other one, oh yeah, written document destruction and written, all of that kind of stuff. Those ones I think are usually pretty easy to maintain. Everyone should be taking notes at their board meetings. I hope you do. And then I hope you have them at least quarterly. So when we get into these policies, it's really easy to fix this if you don't have them, right? Written conflict of interest policy, you could Google one online and there's hundreds of them. Go take one and edit it to your delight, make it fit your organization, have someone from legal maybe take a look at it. There are plenty of law firms out there that work on smaller organizations, and we have, contacts through all of those. Even coming here and talking to the community foundation and saying, hey, like we've got this written conflict of interest, do you have anybody that you could help us, fine tune it? So I'm gonna go back. One of the things I wanted to get back to on this actually is that when you do have a president that's voting, and we talked a little bit earlier about when they have friends and family that now are on the board with them, that just creates an environment for collusion, right? Yeah, so I don't know about you, but collusion is probably the most difficult thing to prevent, right? And how do you do that if your president is already sitting on your board with a vote? So it seems like a pretty simple way to at least prevent that a little bit. But in the grand scheme of things, collusion has to be stopped at the bottom. And it's one of those things where if you don't have that whistleblower policy, it makes it impossible for your staff who's, probably brand new and doesn't know any better to be able to say when things are wrong, right? And it means being really enmeshed in your organization and knowing what's going on, right? I can't tell you how many boards I know of that meet twice a year or less. And if you're not talking to your people, then how do you know that there aren't whistleblower complaints out there, right? So how do we stop collusion? Anyone? Be present is all I can say. It's not an easy task, but I would say that working with people is usually the solution I go with. So back on the policies page, we talked a little bit about all of those things that are supposed to be in play, right? Well, I want to talk about a significant diversion of assets because that's number 5 on part 6 of the 990 is, has your organization become aware of a significant diversion of assets? So does anyone know what that means? No? All right. Well, significant diversion of assets is, it basically equates to $250,000 worth of loss. One of the organizations I know of this year that had fraud they had severance payments that were authorized. well, they were unapproved. So they were not approved by the board. They were not approved by anyone other than the executive director, president, who had a vote and paid himself and his friends $275,000 for severance payments. It's that cult of personality. It's that one person on a board that is able to override all of those segregation of duties that you're supposed to have. Because he told everybody it was okay. So now that organization, because the amount was over 250,000, which, by the way, a significant diversion of assets is 5% of the total gross receipts or 5% of the total assets or the 250,000. So if you are an organization that normally brings in about $100,000 a year in contributions and revenue, if you find out that you had $5,000 worth of theft, that's a significant diversion of assets. It is a death now to your organization. If you have to check this box, it means you will never get contributions again. It's just one of those things. It's terrible. And it's the one thing I spend all of my time trying to prevent for all of you, right? And it can be prevented by being present, by overseeing, by finding that independence, by looking for policies, and then for making sure that your controls are in place. So I was really hoping to use this to write things down from the audience, but so far, I feel like you guys are all asleep post lunch.
We're just scared, not asleep.
I started this by saying I love the 990. Yeah. Yes, I'm talking about like an operations management. Someone who is really running it. You know, they probably get paid for it. They're, getting, I don't know. Right, right. Yep, sorry. I probably should have clarified that. I'm really good at IRS stuff, which means that I'm good at shades of gray and not explaining things well. So one of the problems with that, with smaller organizations, is that you have a limit to your resources, right? You are probably underfunded and don't have much to spend on a back office, if anything. And you're trying really hard to make do with the amount of contributions that you have coming in, but they're not enough to really sustain your operations. Is that ringing true with many of the organizations in this room? Yeah. Because you don't have a back office staff other than probably one person. And the problem is that more than likely you're gonna have problems because you will have those inability to segregate and separate, duties. There is a way to do it, but it's administratively burdensome, which means that you've got to have people checking on each other. And then you have to have somebody that checks in with the board. And I think having that one person that is checking in with the board, and maybe it isn't your executive director. Maybe it isn't the one person that everyone is normally, responsive to. I don't know that there's a perfect way to get around that because smaller organizations don't have to go through audits. That's the thing. And when I did talk earlier, I said that there were a lot of organizations here that are out of compliance with the Michigan Attorney General's office. And one of the things I've seen over the last 6 years or however long since Dana Nessel's been in the AG's office, they've made major upgrades to their system. They have diligently tracked all of the organizations that are currently in their system, and they're getting them all registered. Now they're going through the state of Michigan. They have the Lara site where you can pull every corporation within the state of Michigan. And they're going through those and finding out why they don't have copies of 990s from those returns that are registered as nonprofits. So pretty soon, if you are out of compliance, I would guess that within the next 18 months, you will get a notice from the Michigan Attorney General's office. Only because I've seen them coming through to my other clients, mostly to the ones that weren't registered in the past and now they are. And then they're, like I said, they're slowly working their way through these ones that aren't registered. And that's so that they can get a hold of the bad actors out there, the ones that are out there taking randomly. There are a lot of them. But the only way for them to find the organizations that are out of compliance is going through that list. So, and once they figure that out, well, I have a slide on this, but if you have contributions greater than $275,000 a year, you should have a review. It's required by the state of Michigan. If you have contributions over 600,000, you should have a full-blown audit. And if you don't have those requirements, then you might be out of compliance. And that is how the state of Michigan is working to get more organizations into compliance and make sure that the ones that are kind of on that smaller to mid-size are starting to have to like come into compliance, because $275,000 in contributions is not very much. Not really, not in the grand scheme of things. And I'm guessing there's a lot of you that are thinking to yourself, I have about $350,000 in contributions and I don't have a review. Might be in trouble. Anyway, so anybody got questions so far? Yeah.
We had this conversation during our last audit, which is like what qualifies as contribution, what because like we get government grants and things like that. And then they're like, no, that doesn't count as a contribution. We're talking about charitable soliciting type stuff. I just wanted to clarify.
There's a nice little chart on the Michigan license to solicit that actually does the math for you. And it backs out the government grants. So for that, it would only be contributions technically from the general public. So what we look at on the 990 is usually what's coming in from your regular public. Anything that comes in from a related organization or government grant is excluded. And then anything that is included, say you've got a lot of non-cash grants, you get a ton of investments every year, those are included. So it's basically just your non-exchange contributions that are not government for the most part.
One quick follow-up question. If somebody donates a significant asset to you, like in our case, we're a land conservancy and occasionally people donate land, it is, where does that come in? And
So it would be considered as part of the contribution, but it could possibly be backed out based on it being the conservancy and that being an unusual grant, but that would be something that I would normally call the Michigan Attorney General's office and ask them. And they're really great about answering those types of questions. Like I find that honestly, if I were a smaller organization, just calling the Michigan Attorney General's charitable solicitation line is fantastic because you can get all kinds of answers out of them on very random, strange things. I saw another hand. Oh, it's on the Michigan license to solicit. It's CTS03. Sorry. Oh, yeah. Sorry. I don't even remember what that question was, but one of them was about the Michigan Attorney General. The license to solicit is where you find the dollar values for the requirement for the review and audit. Okay, any other questions? Yeah. We're going to look at that today. I actually have some tools, and in your PowerPoint presentation are 4 links. I'm sorry, they're printed out for you in a PDF, but all 4 of those links are the things that I did to cyber stalk your organizations today. And it gives you access to all kinds of public information. There's the IRS 990 lookup site. There's the charitable solicitation page for the Michigan Attorney General. And I find that these are extremely fun. One of my favorite things is around election time every year, if I'm gonna vote on somebody, I go pull their financial, like their 990s, and I look at their tax returns. And that's how I vote.
How do you make always take about the like the we have some guidance, but other than that,
So you're held accountable by your board. And that's really what they need to do, is find a way to oversee you and find a way to be comfortable with everything that you're doing. And I mean, that could be as easily as just looking at your bank statements. If it's that simple, like, we don't have to overcomplicate things. If you've got an organization that has one bank account and there's not a ton of activity, it's not real hard to oversee what you got going on. It's when you get bigger and you grow and you aren't able to grow your resources at the same time that you're growing your organization, because that's what we're doing is our growing businesses. We're just growing businesses that don't want to have to pay tax. So it's really about finding a way to get comfortable with that oversight. Right? I got way out of line. Okay. Oh, yep, this is my tools. So if you were in this on a computer and you click to these links, these are fantastic. The Michigan Attorney General's charitable solicitations page is great. It has the rules for the solicitations. It has all of the information you would need to get a hold of the Attorney General's office. These are people that I call probably once or twice a week for my organizations. It's how I figure out when organizations are in trouble, is I go to them and I figure out, what's missing out there. Because if you do have a license to solicit, I should be able to find you. In fact, as I was doing my research, I came across a couple of organizations that seemed to be missing some of their compliance, and I could pull up their information, and I was able to, like, call the Michigan Attorney General's office and find out what's the file number, and they can give me your file number. They don't even have to know what I'm, related to, because it's publicly disclosed. So you can call the Michigan Attorney General's office and say, hey, my organization is named ... What's my file number? And if they don't have a file number for you, ask them, why not? And should you be registered? And they are there to help you. They're not there to work against you. They are really there to make sure that you're in compliance, and they want to help you do it. So they're not the IRS, basically, is what I'm trying to get across. IRS is terrible. There's also the Michigan LARA corporate search. So I love this tool because it can tell me anyone's articles of incorporation. It tells me what you're set up to do, right? Are you a sole member? Do you have a bunch of related parties? Are you overseen by a different organization? Are you set up as a board of directors, or do you have like a different kind of voting structure? I can find out a ton of stuff from the corporate search. And then the IRS business master file and the IRS tax exempt search, those are basically, they've kind of replaced GuideStar over the last couple of years because it's now more accurate. The IRS did its own GuideStar. It basically, you can go into that tool, pull up any 990, you can pull up your 990, you can look at, some of you, if you're like recent enough, you can look at your IRS exemption letter. In fact, the organization, one of the organizations I looked at today, or when I was looking at this, they had just gotten their IRS exemption letter issued in April. So I doubt that it's made it physically to the organization yet. You can pull those right off the site though. And that's really cool. And you can get at least 3 years worth of tax returns. So if I go out to that site and I can see that you are missing tax returns for 2020, 2021, and 2022, you don't have an exemption. That's one of those things that if you don't file your 990 every year, you miss it for 3 years in a row, you are automatically without an exemption. And that means that you should be filing a C Corp return and paying 21% on your revenue. So we talked a little bit about this, and I think I skipped over the slide, but the underfunding, right? is obviously a problem because you can't have segregation of duties. And I'm gonna ask a terrible question today, and most of you that might have really small organizations are not gonna like this, but if you're that small and you're that underfunded, should you be operating? It's awful. It's an awful question. But it's something that needs to be asked because there are solutions out there, and it doesn't necessarily mean terminating. It means maybe looking for another organization that's similar in nature to yours to merge with and consider maybe sharing that back office administrative burden. It's not the worst decision. Finding obviously more funding is the goal. But if you're already out of compliance and you've got these issues, then getting more funding is going to be even more difficult. So it's one of those things where obviously you come here, you come to the community foundation, they're going to help you as much as they can and then try not to get some collusion. Now, I forgot about the lack of oversight of the governing board. So one of the things that I talked about earlier was when you've got that one person that kind of oversees everything and is that dominant personality, and it's hard to manage around them. Having limits on spending can help with that kind of thing. If the organization I talked about earlier, if they had a limit on their payroll, because the way this guy that got around it is he made it for, he just jumped the system. Whereas if they had had some kind of a limit that the board has to approve for certain levels of funding for things, expense payments and that kind of stuff, at least you get some oversight there, and at least maybe you're, putting a little kibosh on that. And the things that do obviously help are going to be your single audits, your financial statement audit requirements, those kinds of things, and the attorney general information, like I said. Oh, by the way, I think it's actually 600,000, but I could be wrong. They keep upping it each year. And then one of the things that I do want to talk to you today about is how organizations terminate. And if you think that the administrative burden of running an organization is difficult, wait till you have to terminate one. So those of you that stood up at the very beginning, when I asked you who's a secretary or a treasurer, that's you guys. I have organizations that terminated 7 years ago, and I'm still trying to shut them down. The amount of work that it takes just to shut an organization down is terrible, because number one, you've got to actually have board approval, right? So you've got to say, we've authorized this termination, and whether it's to merge with another organization or it's to completely zero out and just go away. You've got to zero out the balance sheet. So that's got to be all of your liabilities, all of your assets have to be dealt with. You have to transfer those, you have to find a way to get rid of them. And I think we saw recently up here that was one of the problems with the theater, right? Is that there are massive liabilities that could cause bankruptcy. And if you don't know what all those liabilities are, that's a problem. You've also got to solve with the state of Michigan's Attorney General's office and with the state's corporation. So, and getting that done seems really easy on paper, right? But the IRS doesn't make it easy, the state doesn't make it easy, the AG doesn't make it easy. You've got to have all your ducks in a row to make sure that everything has been closed down properly. So, and this is where that significant diversion of assets comes in, right? How did we get here? And what are we going to do now, right? So if you've got fraud, you've got to put it on your 990, you've got to check that box. You've got to dissolve the corporation, you've got to get rid of the assets, you've got to get rid of the board, the employees. That's a terrible thing to have to deal with. And if we can prevent this from the beginning, I think that that's really the goal of everyone, right? Is that we really don't want to have to terminate. We don't want to have to dissolve. So does anyone have questions? Yeah. So a 990 is required if you're a 501c. Usually on your IRS determination letter, it will actually say that you have to file a 990 because there are religious exemptions out there and some other exemptions that keep you from having to file the 990. A 990N should be filed if you have less than $50,000 worth of income a year. And what that means is gross receipts. 50,000 in contributions, program revenue, 50,000 in funding of any sort. What it doesn't mean is your net income. A lot of organizations think that if my net income is a loss, I don't have to file a 990. No, that's not how it goes. You only get out of that full 990 or 990 EZ if your actual revenue is under 50,000, and it's actually an average of every 3 years. So if you've got a year with 40,000, a year with 45, and then one with 55, you're okay because you fall under that threshold as long as my math in my head is good. And then with the 990 EZ, that one's what I want to say it's 250,000. You got to have, I believe it's million in assets or less. The easy is a lot easier. But in the grand scheme of things, you're still going to have to list a lot of the same information, right? Your board of directors, you just don't have to fill in comp and that kind of stuff. And there's also supporting organizations have to file 990s. They can't always get away with the EZs or the Ns because of the type of organization they are, because they have to fill out that Schedule A. So, did that answer the question on the different thresholds? Okay. Anybody else have questions? No? For Lara, yep. And I'm wondering if I can actually go to that and we'll look at the. For Lara, they wanted to know if we had to have an account. And what I'm doing is pulling up the actual site on the big screen here, and it shows you how you can search. So if we were to look up the Bay Area Movie Foundation, sorry, I'm having to type one-handed while I hold a microphone. Here you are. And I can go down here and look and see your board of directors, and I can see all of your filings. Basically, just your annual report. And if I wanted to, I could go down here and look at your articles of incorporation. I'm gonna go back to the PowerPoint. All right, I don't know how to get back here, Maddie. Thank you. Thank you.
That's fine.
You know the IRS exemption.
Yeah, absolutely. I can just change it. It's interesting.
Okay. Will you look up Bay Area Community Foundation? You'll have to change the drop down in the middle to a name.
Sorry, I apparently can't read.
Okay, this has really replaced GuideStar in a lot of ways, and it's easier to navigate because you can get in here and pull any 990 for anyone at any time. And that's really helpful because it actually shows you which organizations have current 990s on file. It's how I was able to figure out that some didn't. recently. So the question was about how far behind the IRS is right now. So it's gonna keep going around you. So the IRS was about 3 years behind when we went into the pandemic. And over the past 4 years, they got way farther behind. They moved about 20 years behind, and now they're only about 2 years behind. They shut down during the pandemic, and that was really difficult because nothing got processed, nothing got looked at. I am currently right now under IRS examination on 3 of my clients. And that's a sign to me that the IRS is back up and running like it should. Because they're back out and auditing, and they are auditing exempt organizations. For the most part, what we've seen recently is that they are going after healthcare organizations. So if you're not healthcare, you're probably a little more safe. They really don't like health systems right now. They want to look at every health system in the nation. They don't like unrelated business income. They're going to go after that. And they are really picking on payroll audits, by the way. So if you're ever experiencing 1099 or W-2 issues, you might want to get those in order. Okay, these goals. So and then scroll down. We can look and open that up. You pull a copy of your 990 if you want. This will also, if you have a 990T, it puts a copy up there also, which is kind of cool. But this is where I go to pull copies of all of the tax returns. So, and it's one of the greatest tools that the IRS has put out recently. The IRS has actually put out a couple of newer technologies over the last 2 years that I'm somewhat impressed with. They've got one for tax practitioners where we're now able to go into the system and communicate within the IRS with agents, which is like a major improvement. And then there's a couple of other things that they've been putting together from a technology perspective. I'm just worried about the day that the IRS actually figures out how to do AI. So we're all in trouble if they ever figure that out. But all right, so I just really wanted to show you these because they're tools for you, right? I'm assuming some of you probably at the Community Foundation have to do a lot of research of organizations to try to figure out where those grants go, right? And how you earn them. And this is a great way to figure that out and to help our organizations get back into compliance. All right, any other questions so far? No. Okay, well then, I'm about out of content unless anybody else has anything else. Oh, yeah.
Discuss, I think maybe it's one of the issues there. To think about is how can board of directors select them? If we don't have an independent way of finding that there is 50 directors, simply selects the board members, which I think happens all the time. And in effect, board members work for the director rather than vice versa. And I think that's on organizations that I've seen in this area. That's one of the major issues, and but that's background of all of this. So you expect they hired not.
I have sat on boards myself where I felt that I was a figurehead. I was brought in by someone because of my financial acumen. I was brought in to tell people, about what I know about exempt organizations as a CPA. And what I figured out is that my vote was absolutely meaningless. And unfortunately for me, I resigned from those boards. Now, you might not all be in a position where you can resign from that kind of thing. Obviously, education is probably the best way to defeat a board that's not diverse enough. Right, and there's actually some checklists that have come out lately, and I will try to get one of them sent over to Maddie so that she can send it out to all of you. But there's a checklist out there that helps you develop a board that's more diverse, that has more of a function as a, it asks about financial acumen. It asks about community involvement. It asks about arts and, those types of things. It's a checklist that helps you work to get a more diverse board, but it's one of those things that doesn't happen overnight. And honestly, the best boards that I've sat on are those types of boards that are looking for a way to be more inclusive and diverse in their abilities because they have people on the board that are more inclusive and diverse. I think I had another question. You're speaking my love language. I love unrelated business income. It's not a bad thing, actually. Unrelated business income, just in reporting it means that you're doing your job. It means that you're doing your due diligence as an organization and trying to make as much money as you can for the organization, but also reporting it accurately. But the three things, right? The duty of care, right? The duty of obedience and the duty of loyalty. So not really sure what the question was, other than just. Yeah, so with the, and I think I talked about that. Sorry, I had surgery last week, so I've been a little breathless today, but I'm doing all right. So with the duty of care, I think one of the things that we talked about originally was that asking intentional questions, right? Asking the tough things, asking and making, the problem is that when you ask tough questions, you make people uncomfortable. And that's the hard part, is that it's not about making people uncomfortable, it's about finding a way of doing it without coming across like a jerk, right? And that's the thing, is that most of us don't want to cause problems. We came into this to cause solutions, to fix problems, to fix all those things out there that the government can't fix without us as people. And so really, I think the best way to go with that duty of care is through communication, direct communication, and not being afraid to ask difficult questions as board members, right? Or even as executive directors or whatever position you have. A lot of us don't ask those questions because we don't want the answer. And then the duty of loyalty, I think that is really difficult because as a board member, I get asked a lot. Not just my time, right? But they want me to donate. They want me to put on events. They want me to do, these things. I gotta go be at some media day for this one thing. And it takes a lot of time. And the problem is that I'm doing it for free, right? And so that duty of loyalty tends to conflict with my own personal life and personal professional life, right? Should I do this thing for the board, or should I go do work that actually pays me? And that is really tough. It's one of those things where if you don't really have the time to give, maybe you shouldn't be sitting in that position. It's the same as, if you don't feel like you really have a voice, should you be sitting in that position? And once again, we're asking terrible questions. I'm really good at asking terrible questions. Like, does anyone have a question? But, okay, and then the other question you asked was about unrelated business income. I love this question. So UBI is anything that is not for your tax exempt purpose, right? And most people don't understand the rules around UBI, and that's because the IRS wrote really terrible guidelines. But basically, I guess let me back up for a second. Tax exemption, right? Your tax exemption is earned by serving your charitable class. We talked about that, right? So your charitable class is whoever you designated in your articles or your bylaws as the community that you're going to serve, right? The people that are in need. These are the ones that you're not serving that charitable class, you tend to lose your exemption. So unrelated business income comes when you're not serving those people, right? You're doing something else. You're a university. Normally, you're supposed to educate people. But on the side, you sell advertising on your big screen at the big house. So yeah, you're gonna have to pay tax on that advertising, right? It's anything that's outside of the scope of your normal tax exempt purpose. And when you report it, most of the time, you're gonna be able to find more than enough expenses to throw at it to offset it so that it's probably gonna be a loss, more than likely. And when it's a loss, then you're not necessarily supposed to report it because then it's a hobby loss and there's all these weird rules. But if you actually look at the 990T instructions, they'll tell you a lot about how to identify it and how to report it and how to find the expenses to offset against it. Reporting UBI is not a negative connotation. It's actually saying that you've done your due diligence in figuring out all of the revenue that isn't related to your tax exempt purpose. So that kind of. And we live in the state of Michigan, which has a $350,000 UBI requirement. So if you only have, $10,000 in UBI, you don't have a Michigan filing requirement, which is even better. We should all be happy we don't live in the state of Ohio. For many reasons. I practice a lot in the state of Ohio, and there are many, many reasons that we should all be happy to live it here in the state of Michigan. All right, anybody else have questions? I think we're down to about 5 more minutes. No?
Yeah. Talking about authority.
They're not. Really, they're getting through all of the paper mail that they've got. The IRS is still behind in their paper mail. So the question was, how far is the state of Michigan behind? The state of Michigan isn't behind. They're on top of it. And from what I've seen of the IRS, they are quickly picking up speed. They are still digging out of the FICA deferrals. They had major problems processing those FICA deferrals during COVID. And it messed everything up, and they have just piles of mail sitting, waiting to get fixed. Once they fix that, I think they will be a lot more on path to answering questions. And like, I call now and I get right through. I spent 4 years calling the IRS and never getting an answer. So it's nice that they're answering, but it also does mean that they are starting to examine. And when I do say, if you have 1099 issues, if you're getting CP 2100 notices, make sure you answer those. Those are the ones where you issue a 1099 and it goes to the wrong person because the EIN or the social security number doesn't match up. They're gonna come find out why you aren't answering those notices. So it's just one of the things I've seen on my IRS exams. Any other questions? Thank you.
All right, I've made some notes this time because did anyone notice that I forgot to acknowledge Marlena Cork? Who noticed? I know people noticed. That's what happens when you're ad-libbing and going with the flow. You forget someone who's like your partner in crime at the work you do. So I wanted to welcome her to the Bay Area Community Foundation. She's been with us since January. She's our Director of Strategic Initiatives. As we were talking, as Amanda was talking, I was making some notes. So I've done startup nonprofits, and then I'm here in this organization, which I would consider is pretty professional and very well established. So just some things that I've noticed in my 35-year career in the nonprofit sector that may be helpful, especially to those just starting out. This question of don't be afraid to ask questions. We were in a finance meeting and they were asking me some questions. They're like, we don't mean to offend you. And I'm like, oh my gosh, if asking questions is offending the executive director, your director, right? You can do it kindly, but you have to really take a look at yourself if you are getting offended because oversight questions are being asked. They are strengthening your organization. They are protecting you. So please don't be afraid to ask questions. Don't go rogue, right? Stay within the confines of the organization. Another thing, director and officer coverage. Does every nonprofit organization carry D&O liability coverage? If not, you need to have it. That will protect your volunteers that are working with your organization, but only if they have the duty of loyalty, diligence, and all that other stuff. So you need to be having regular meetings. Your meetings are probably outlined, the frequency in your bylaws. That's why you need to be looking at your bylaws. Are you having meetings when you say you're going to be having those meetings? Are those meetings recorded? Are the minutes approved at the next meeting? If that is not happening regularly, you have governance issues you need to deal with. You also need to be seeing your monthly financial statements. Right? There is no shame here, right? Because I've done startup. I did finances in an Excel spreadsheet. Is anyone in here still working in an Excel spreadsheet for your nonprofit's finances? Okay. I did see a brave soul that was willing to raise their hand. So if there is anyone else here, I would say, look up TechSoup. So for the new nonprofits that are coming online, there is an organization called TechSoup that provides very, very highly discounted software. Get QuickBooks. Okay, make an investment in your organization because this is how you're going to grow. And it's really not going to be all that expensive. And QuickBooks, it's very intuitive. Okay, even the accounting people are agreeing with me. Other places where I have seen things go wrong over my career, credit card charges. If any staff member have credit cards, whether you're a small staff, someone on the board, the treasurer needs to be overseeing and signing off on those credit card charges. If you have a larger staff, you can have a system of checks and balances with it. Sue Jetson reviews all of my credit card charges. And then I sign off on everyone's credit card charges, right? So we have a 2-stage level of review on that. If you don't have the staff, it's going to be your treasurer or it's going to be your board chair. Your treasurer should be signing off on your financial statements monthly. Another thing that I've seen is transfers, right? We are a transfer society. We have ACHs coming in and out. We don't always have receipts for that. If you are a board member who is reviewing financial statements and you're seeing a lot of transfers, you need to be asking for the paper documentation backing those up. You need to understand what those transfers are occurring for. And keep all of that in a file. When you give that financial statement to someone, you have all of that documentation right there. So when you do start meeting the requirements to go into your audit, you can literally hand that pack of papers to your auditors. When you do your review of your bylaws, what you're also looking for is everyone operating within bounds. Right? Your bylaws are going to define what are appropriate activities for your executive director or your CEO. Is that how that person is managing the organization? Your bylaws are going to define who has authority to sign contracts, who has authority to sign legal arrangements. As a board, you need to be monitoring that and making sure that happens. Bank statements. I mean, can you open up a bank account with just one signer? Are there any, Todd Clements, I'm going to put you on the spot. Is it possible to open a bank account with only one signer for a nonprofit? Okay, so anytime, so he said you could open up a bank account for a nonprofit with just one signer, which could be your director. Or it could be your board chair, right? When I said we got to all operate within our lanes. So check your bylaws, find that out. When we have opened up bank accounts, we've actually had to provide a corporate resolution. We provide, what are those things when we drive? Driver's licenses, social security cards, all of that stuff. And so don't get caught by things that are very easily able to be monitored. Did I have another? Okay, small boards. It is very hard to have a system of checks and balances. However, you can do it, right? There's no bright line test, whatever that phrase is, of whether you are in compliance or you're not when you're a small nonprofit. They will look at the entirety of the organization. right? So maybe you are the one opening mail and you are the one depositing the check. And you are the one that's cutting the check to pay bills, but guess what? Don't be the only signature on that check. Or have a policy that if the check is going to be over $1,000, it's relative, however, whatever the size of your organization is, that it's going to have a second signature. So create those systems, have them documented in policy. Okay? Those were just some of my lessons learned over the years. So happy to talk to anyone about that. Anyone have questions on that?
By having those checks and balances in place, if you're the only person with access to all of those things, you're opening the mail, you're writing the checks, you're in charge of everything. You put yourself at risk by not having checks in place. It's a dangerous place to be. So it puts you in a better place if you can have someone overseeing you.
Compensation analysis. So one other thing, if, the Michigan Nonprofit Association is a statewide group, they do an annual, wage and compensation analysis. So you could go to that to do your annual, as board members, your annual or 3 times every 3-year review of compensation. You also can just start trolling on 990s, and Amanda or Maddie or I can show you how to do that, okay? All right, so here were where my remarks started, and it was to provide some context for the Community Foundation and how we award grants. So we're awarding or investing over $2.2 million into the community, Bay and Aranac County, our service areas, every single year. And Alon is here. He asked me a question one time on a site visit that helped me understand how critically important it is that our nonprofit partners understand how funding decisions are made within our organization. So we are an organization, we actually have a related entity, which is this Pierre Marquette Depot. So this whole building facility is another business, so to speak, of ours. So between the Community Foundation and the Depot, we're a $60 million organization. And Maddie's gonna be sending these slides out too. So we have 2 pools, we call them pools of money. One is our endowed pool, which is where most of our assets are at. And then the other one is our non-endowed pool. And that is money that flows in and out of our organization for special initiatives, for sometimes an organization, maybe it's a wannabe nonprofit, but they're not really there yet. And they will come and they will umbrella under ours with the plan that within 2 or 3 years, they are launched and out on their own. So those are our non-endowed dollars. But then within our endowed pool, we have 450 individual funds. So that means that 450 families, businesses, whomever have come in and established a particular fund that they have named. And they have said, this is what I want my fund used for. Those funds, we group them into different categories. So in the very center is unrestricted. And you can see that that's one of the smallest little circles. So those unrestricted funds, when you are applying for grants and you are having conversations with Maddie, that is all of our unrestricted fund assets. When you are a nonprofit agency that has an endowment with us, you're up here in this designated agency area. And we also hold funds there for if someone comes in, they have a very clear purpose of what they want to have accomplished with that. So they would end up in this bucket. I pulled ours out as an example, and I'm not taking credit for this because it was done for me. But this is an example of a board who understood the value of endowment for long-term financial sustainability. And I will tell you that our administrative endowment at the Community Foundation accounts for almost 14% of our assets. So we are so incredibly fortunate. And that protects us against all types of volatility that happens out in the community. We have field of interest funds. This is another big chunk of our dollars. That's when a donor comes in and says, I really care about education. I really care about mental health. That flows into our competitive grant making. So when you're applying for a grant, you're ending up in this unrestricted bucket or this field of interest bucket. Scholarships, huge, almost 25% of all of our stuff is scholarships. So it's a huge component of what we do. And then we have this segment here that we call donor advised funds. So we have 25 donor advised funds. So what that means is there are 25 local families that are working directly with us on their charitable giving. So they will make grant recommendations to our funds. And that brought up the situation. Do you care if I actually use what we talked about, Alan? Alan? So he said to me, why did you give $50,000 to Good Samaritan? And I'm like, when did we, it was a donor advised fund recommendation. Right? So not everything, if you look at on our 990 and you can see every single grant we made, we may be giving larger grants in some area because we have the appropriate funding stream and alignment and interest between a donor and you as an end user now. So it's not always everything that's running through this competitive process. We have our unrestricted funds. We made a concentrated effort to build those endowments about 3 years ago. It was now. At that point, we'd only had 47 unrestricted funds in basically 40 years of establishment. So we really went after it, and I'm proud to say we now have 75 unrestricted funds, and they now account for 14% of our assets. So the more we can build up this, the more the community is saying, we trust the board of the Bay Area Community Foundation to address the needs that are most critical at the current time, right? Because these are dollars that are here forever and ever. So when you apply for a grant and you say, well, you're giving 2.2 million away, why am I only getting 10,000? It's because we're working to align all of the different interests of the 450 different funds with how our grant process goes. So did that demystify anything or did it make it more confusing? Demystify. George is my guy. If you ever have questions, this is why we always encourage you to contact us before you start applying. Because we may know, you know what, we don't have any money left that's going to be able to apply to your project. We are now making a very clear effort. We are not spending our unrestricted money in the first round, right? We're spending about, we'll allot maybe 60% because we want to make sure with our 2 competitive grant cycles that there is money remaining for the fall. So that as nonprofit organizations, you are able to apply when it makes the most sense for you to apply. Any questions for me? If not, I'm going to turn it over to Maddie and she's going to go over some things we have coming up to give you a little more insight into our grants. Great. You're up, Maddie.
Right. Hi, everyone. I just have a few things to go over with you while I have you in the room today. So the first thing that Diane talked a little bit about already is our Community Partnership Grant Program. This is our main grant program that we have here at the foundation, and it happens twice a year. So we have one cycle in the spring and one in the fall. Our fall cycle will be opening soon, and that is going to open up on July 8th and close on September 9th. We have a wonderful group of really dedicated community volunteers who review all of our grant applications that come in. So during the month of October, all that they'll be doing is reading all of the grant applications that we get from the community, and we'll announce funding recommendations in about mid-November. I do have on here, some of the funding areas that we look for. We have arts and education. We also have environment. Particularly, a lot of the things we look for are environmental quality, preservation, public education, those sorts of things. We also look at human services, recreation, and different community initiatives. If you're thinking about applying in the fall or in the spring of next year, please reach out to me. I'd love to have a conversation with you about the project or program that you're working on to get a better feel for your organization. Kind of going off of that, we also have another program that we offer for our neighborhood grants. This program is open year round and is really intended to strengthen our neighborhoods in Bay County. So we work alongside nonprofit organizations as well as some different neighborhood groups that may apply through a financial fiduciary to really do some grassroots work in our neighborhoods. So this can look like block parties, as you see on the screen, it could be a mural project, things that are really impacting our community residents. We do require some pretty direct involvement from them because we want to hear their voices. So if you are, collaborating with residents in the planning, development, and implementation of some of your projects, please reach out to me. I would love to get you aligned with this program. One other thing I wanted to touch on as BACF has been doing our own diversity, equity, and inclusion journey is a project that we have in collaboration with the YWCA of the Great Lakes Bay region. So this is our Building Nonprofit DEI Awareness Program that's intended to support our nonprofits in their own DEI journeys. So this program really has some awesome resources for you, both organizationally and personally as well, to deepen your understanding of diversity, equity, and inclusion. Maura is a wonderful facilitator of this program. She is kind of trained in, down here, the Intercultural Development Inventory, which is an assessment that they do to kind of look at any unconscious biases that we may have in our organizations or in our personal lives. And as you work through this Interact program here, you really have the opportunity to develop personal growth plans as well as organizational growth plans. We do have space for up to 80 participants in the program, and we will keep filling until we hit that number. So if your organization is interested, please reach out to me, and we can talk a little bit about how to connect you with the YWCA. The last thing I'm going to hit on here, you have a flyer in your folders that you might have seen. If you haven't heard anything about this already, we've been working with the Breaking Bread Village. They are a nonprofit organization, based in Midland County. And so this is kind of something that we saw starting out with the Midland Area Community Foundation. And they had Erin Patrice, who's here with us today, having some conversations in their community surrounding, diversity, equity, and inclusion and some of those topics. So you'll note kind of on the flyer in your folder some really important upcoming dates that we have. We host all of these conversations here in the 1904 room of the Pure Marquette Depot. And really what the Breaking Bread Village is after is creating those spaces and connections, right? And having really open conversation and dialogue where you hear a lot of perspectives that you might not normally be used to. So the one that we have coming up in August is on August 13th. We're going to be talking about honesty and transparency. We do have free event registration on Facebook. So we just ask that you kind of check us out on Facebook, register for that event so that we know you're coming. You can come listen to a wonderful panel of people in our community talk about, their views on honesty and transparency and what that means to them. Other than that, I just want to thank you all for spending part of your Monday with us. And again, thank Plante Moran and Amanda for their wonderful presentation today.